Dear clients, welcome to Phillip Securities Research Weekly Market Update. Open-ended quantitative easing may or may not revive a sputtering US and global economy, but as risk assets have rallied, the market seems to have presumed a global economic rebound. Whether that occurs or not is debatable. But first and foremost, oil is likely to make a comeback, which means so will inflation, which means the search for yield story faces considerable downside risk. One has to be selective with fixed income now. Avoid now low-yielding treasuries in the face of upside risk to inflation. Continue to long mortgage-backed securities. As for the S&P 500, one has to ask how much of QE3 has already been priced in. A 3-month run-up on anticipation makes us think quite a bit, so don't be surprised at tactical profit-taking soon. But the default presumption is that the underlying uptrend remains intact. As for Asia ex-Japan, we've smashed the downward trend line and turned it into support, so the odds lean towards renewed uptrend, tactical profit-taking notwithstanding. Our overweight position on ASEAN remains unchanged, as governments there have committed to the economy, even as global downside risk recedes with so much monetary stimulus. For our preferred ASEAN picks, please see our regional strategy and sector reports and poems. The STI remains positive, but may probably underperform the region in the near term as portfolios reduce the safe haven trade for more risk. Singapore equity strategists have continued to stick with Sembcorp, Comfort Delgro, Singtel, and the sector overweight aviation services. Top picks SIA Engineering, SATS, and ST Engineering, all of which have outperformed the STI this year, except for Singtel. Thank you, and tune in next week to Phillip Securities Research Weekly Market Update.